used for this particular posting. Now, what kinds of general entries that we have discussed in our first lecture? First of all, we will transfer the asset to realization account. Entry realization account debit to assets account. So this entry we recorded in our problem. So here our question, all assets, it means the assets includes payment company's asset, computer, furniture, inventory, debtors, bank, and cash balance. These are the assets we recorded here in the books of payment company, relation account debit to sundry assets. We recorded this entry in our last lecture. Then friends, next entry in our notes, if you see that the second entry in the amalgamation, transfer the liabilities to realization account at book value. Entry will be sundry liabilities account debit to realization. Now this particular entry we have to write. We have to write. So here in our problem, creditors and bills payable, these two liabilities are there that we have to show. So we will write by sundry liabilities creditors 5,000 and we will show bills payable, and the value of bills payable is also 5,000. So we will write here in our solution 5,000. After recording these sundry liabilities we recorded. Now friends, next gender entry in our notes is there, transfer of the losses and deferred revenue expenses to the old partners. If it is a losses are there, such losses also transfer. If you see the in our problem, is there any losses? They are not mentioned asset side losses, profit and loss. So this particular entry we will not record, we will not post in our ledger. Then after that, next general entry is there, recording of the sale of business. Recording of the sale of the business. It means purchase consideration due entry we have to pass. Purchase consideration due entry we have to pass. The entry will be new firm account debit to realization account. New firm account debit to realization account. Now this particular entry we will record it in our solution. Now we we got this purchase consideration value of the payment company 29,700. Now entry will be new firm account debit to realization. So here we have to write here by new firm account, by new firm account, and we will record purchase consideration value, that is 29,700. Now friends, new firm account ledger also we prepare already. New firm account ledger we also prepare. Now relation account credit side we recorded new firm account. The new firm account ledger, same entry we will post it to debit side to realization account, and we will record the value of purchase consideration, that is 29,700. 29,700. See friends, this particular entry, this particular entry we recorded new firm account debit to realization 29,700, and we will give this particular effect, we will give the posting to new firm account also, and we recorded here also in new firm account debit side to realization 29,700. So purchase consideration due entry we recorded, and posting we have to show to ledgers, relation account credit side, and new firm account debit side. Then friends, if you see the general entries, next general entry is after recording purchase consideration due. Next general entry is asset sold not taken over by the new firm. Asset sold not taken over by the new firm. Entry will be cash account debit to realization account. Now, in our problem, they are not provided any kind of assets sold. Assets sold, this kinds of information is not there. So we will not pass entry of asset sold. Then after that, friends, next general entry, if you see that entry number 7, general entry number 7, this says that asset taken over by partner. Asset taken over by partner. Whenever the asset taken over by the partner, the entry will be asset taken over by the partner. Entry will be realization account, partner's capital account debit to realization. Partner's capital account debit to realization. Now, friends, if you see that in our problem, in our problem, second number, furniture was not taken over by new firm. What they are provided, furniture was not taken over by new firm. If it is not taken over by new firm, this wording is there. If the furniture was not taken over by the new firm, so this particular furniture can be sold by the old firm, or if it is not sold, it is taken over by existing partners. If it is not sold, it is taken over by existing partner. Now, this kinds of information is not there, whether it is sold or taken over by the old partners. So what we have to do? So we have to assume that such furniture which is not taken over by the new firm, such furniture taken over by the old partners. Such furniture taken over by the old partners. Now, furniture value is 5,000 in Prem and Company. Prem and Company furniture value is 5,000, and under Prem and Company, two partners are involved, Prem and Anil. Prem and Anil, these two partners are there, and they have furniture value 5,000. This furniture value, this particular furniture taken over by the Prem and Anil as per their profit sharing ratio. Now they are not provided any kind of profit sharing ratio. If the profit sharing ratio is not there, we have to assume that the profit sharing ratio is equal. Whenever the problem is silent about the profit sharing ratio, that time we have to assume that profit sharing ratio is equal. So here also, this furniture which is not taken over by the new firm, it is taken over by partners Prem and Anil in equal equal proportion. In equal proportion. So entry will be partners capital account debit to realization. Partners capital account debit to realization. So realization account credit side we have to show by partners capital account. My partners capital account, and we have to write here 5,000. We have to write here 5,000, and we will distribute it among the partners. We will distribute it among the partner. Prem, Prem has taken over furniture. and we will put the value only 2005. I hope you understood. Then Anil also take furniture and value we have to put 2005. It means it is this furniture asset taken over by partners as per their profit sharing ratio, and it is recorded realization account credit side. It is recorded realization account credit side, and partners capital account debit to realization account. Now this partners capital account also we prepared these particular values we have to show in our partners capital account also, where we have to show partners capital account these particular values. So we will write here partners capital account debit side to realization account, and here 2500 and 2500. See friends, what kinds of effects we have to give whenever we have to write this 5000 we have to show here. These things you have to keep in mind how we will show this furniture value. It is not taken over by the new firm, therefore we have to assume that it is taken over by the old partners Prem and Anil, and it is taken over as per their profit sharing ratio. Therefore, realization account credit side we have to record partners capital account debit to realization, and second effect we have to show partners capital account debit side to realization. Prem's column 2500 and Anil column 2500. I hope you understood these effects. Then friends, after our general entry number 7, second 8 number general entry, what they are providing, payment of liability not taken over by the new firm. It means those liabilities which are not taken over by the new firm, it can be taken over by, or we can say uh, paid by new firm, or sometime liability can be taken over by the partner also. 9 number adjust generate is there, liability taken over by the partner. So if the payment of the liability not taken over by the new firm, entry relation account debit to cash or bank account, and if it is taken over by the partner, entry relation account debit to partner's capital account. These things you have to keep in mind, and in our problem they are not provided any kind of information about the liability which is not taken over by the new firm. Therefore this kinds of entry is not considered while preparing this solution. Then 10 number payment of realization expenses. The entry realization account debit to cash or bank. Relation account debit to cash or bank. If you see that in our problem, is there any expenses and which is paid by the old firm? They are not provided any kind of expenses, so no need to show here. Then after that, after this, next adjustment they are providing, settle the partner's loan. If it is there, settlement of the loan, partner's loan account debit to cash or bank account. Partner's loan account debit to cash or bank account. But there is no loan. Is there any loan? If you see that creditors and bills payable, these two liabilities are there, and there is no loan, so no need to put this loan. Clear? Then, friends, now whatever capital is available, This 11,500 and 11,500 in our liability side. These are balances we will transfer to partners capital account. So we will write here partners capital account by balance brought down. By balance brought down. Amount will be 11,500 and Anil also 11,500. See friends, we recorded these capital balances which are there in our question. The capital balances we recorded partners capital account credit side. Capital balances recorded partners capital account credit side. Then there is no any kind of items regarding the general reserve also. So no need to consider. Now friends, in our problem all effects are recorded. All effects are recorded. We transfer the our assets, liability also assets are transferred to debit side, liabilities are transferred to credit side, purchase consideration also recorded. Then partners capital account, whatever furniture which is not taken over by the new firm, it is taken over by the new, old partners. Now what we have to do, we have to close this. We have to close the credit side first. We have to close. Total will be 44,700. Here also we have to record 44,700. If you see the debit side total, yes, we can. The debit side total only 33,000 and credit side total 44,700. So we have to find out 44,700 minus 33,000. The rest of the value 11,700. This particular 11,700, it is distributed among the partners as per their profit sharing ratio, and they are not provided any kind of profit sharing ratio. So it is a, we can say that it is a profit on realization. Profit on realization, and it is transferred to partners capital account. It is transferred to partners capital account. Now partner frames capital account and Anil's capital account, and 11,700 we will distribute. So share of frames we will have to consider 5,850 because we have to distribute equally. And Anil's capital account, his share also 5,850. Friends, this they got this particular profit. So these things you have to keep in mind. So this whatever profit is there, this particular profit and this particular profit we will distribute it equally. We will distribute it equally as per their profit sharing ratio. Yes, I hope you understood. Now this we distribute equally as per their profit sharing ratio to Prem and Anil. And now this particular profit we will transferred to partner's capital account. So these amounts we have to show partner's capital account credit side. So this amount we have to put here. So here we have to write by realization. It is a profit. It is a profit, and we have to record Prem's share 5850 and Anil's share 5850. Yes, I hope you understood what is going on. After recording this, after recording this, now we have to close partners capital account. SUM 17,350. SUM same amount we have to consider 17,350. Now here also we have to record 17,350 and 17,350. And what are balance come? How we will calculate the balance? 17,350 minus 2,500. So 14,850. Here also same 14,850. This particular balance we will transfer to new firm account. It is transferred to, so we will write here to new firm accounts. See that the balance we will transfer. These are, we can say that, balancing figure. This particular balancing figure we will transfer to new firm account. It is transferred to new firm account. I hope you understood this. And is a balance of the Prem's value of 14,850 and Anil's value also 14,850. This I hope you understood. Now, whenever we will transfer these values, this particular value we have to show credit side of the partner's capital account. Where we have to show credit side of the partner's capital account. What we have to write here? Prem's capital account value we have to show 14,850 and Anil's capital account value we have to show 14,850. Okay, so these particular effects we have to show credit side of the new firm account, and how we will show separately. Prem's capital 14,850 and Anil's capital 14,850. Here we have to put here by. Then after that you have to close new firm account. Close this. SUM 29,700. Here also 29,700. It means new firm account tally both the side same amount is there. There is no issue. It is tally of new firm account. It means in the books of Prem and Company vendor firm, how we will prepare realization account, partners capital account, and new firm account that we have studied. Now you have to start Raj and Company's preparation of realization account, partners capital account, and new firm account. These things we have to discuss in our next lecture, but you have to try. Okay, fine. Do you have any doubt? regarding how to prepare these books of records, how to write realization account. Now, friends, I will share this this particular lecture on YouTube also. You have to see the YouTube channel. You have to lecture, and again you have to study. If you have any difficulty, that time you can ask the question. Yes, is there any difficulty? I hope you understood this. This lecture is over. We will discuss same things in our next lectures. Now keep watching this. Our lectures come regularly because of the net issue. Uh, I can't connect in time, but we have to do one thing. You have to keep in mind your exam will be there, and very soon we will issue the timetable also, and therefore you should prepare yourself. Whatever we will study, the same things we will reflect. Okay, bye, good night.